even 100% if you're really depleted. Yeah. So this is the framework I have developed. My framework is specifically dealing with implication because you're about to write. We want you to get as many marks as possible for you to pass, get the 100% if you want it. So here's the framework. So you have to align your structure of calculations according to the following steps. When I say align your structure of calculations, I mean you have to have this framework of thoughts in mind when you approach the scenario and consequently the required. So from the scenario, they don't give you useless information. So from the scenario, you have to determine if the taxpayer is a VAT vendor or not. So let us go to the scenario. Yeah, so it's question one. No capital gains tax. So Pretty Candle Pty Ltd, Pretty Candle, is a resident company that manufactures and retails candles locally. Pretty Candle has a year of assessment ending on the last day of March. Pretty Candle is a category A value-added tax VAT vendor. Okay. So now we know that this person is a category A valid tax VAT vendor. I know this might seem basic or rudimentary, me focusing on this aspect, but you will see that this aspect will continue to affect the rest of the calculations through, throughout your test or throughout your solution. So let us go to the implication of knowing that this is a tax vendor. So VAT vendor, I mean. So since you know that this is a VAT vendor, you must be careful of VAT. These are the principles to understand. If an entity or taxpayer is a VAT vendor, amounts that are included in taxable income are exclusive of VAT. Furthermore, if the taxpayer is a VAT vendor, but they cannot claim VAT input on a specific amount, that amount will be inclusive of VAT. An example of this is entertainment. This will be further emphasized as I go along into the question with you. Yeah. So I'd like for us to go and continue with the scenario because this is a framework of thought. So even whilst you're reading the scenario, you're applying the framework. So the community regards the manufacture of candles as a process of manufacture. That should trigger something in your mind. It should trigger what? Section 12C. Assets that are capital assets that are used in the process of manufacture. You know that there's a specific rate there. So yeah, you know now. So Kevin Suban HDT is a sole shareholder. This might trigger something else, but let us continue now. And managing director of Pretty Candle. Kevashan is a South African resident and lives in Rosberg, Johannesburg. On 31st December 2018, Pretty Candle's financial manager resigned. Management has requested that the general accountant to assist with the financial manager's duties and has contracted with Nabila Johnson. Hereafter will be known as Nabila. So a tax consultant to assist with the taxable income calculation for the year of assessment ended 31 March 2019. The general accountant prepared the calculation of the company's accounting net profit before tax. The general accountant is, however, concerned whether the calculation is correct, as he was responsible for the duties of two people, and some of the work previously done by the financial manager is new to him. So this leads us to the third step of our framework, which is determining if the accounting profit provided is correct or not. Now you know that from the scenario, we know that even the general accounting that was like put in work to do the accounting profit before tax, even that person is not sure if the accounting net profit before tax is correct. So we know that it's not correct. Let's continue the scenario. So they're saying that Nabila identified the following. The accounting net profit before tax and before notes A to C was 683,000 Rand. A few transactions taken into account in the accounting net profit before tax of 683,000 Rand, but were the accounting and taxation treatment might be different is reflected in notes 1 to 7. And a few transactions that are not yet taken into account in the accounting calculation is listed in notes A to C. This also leads us to another step of the framework, which is if the accounting net profit before tax is not correct, you must focus on the transactions that are taken into account first. And you must always keep in mind that they were taken into account because there are ways that the scenario is designed to trick you, i.e. a spinning fine of 1,200 Rand was paid. But you will see that as I do the scenario. So let's go and do what I said. Let's go and focus on the transaction that you're taking into account. And remember that, as you can see here, they are saying that all amounts are exclusive of VAT unless otherwise stated. And now you know why. It's because this person is a VAT vendor. But you must be careful of the amounts that are otherwise stated. So yeah. So let's start with the first point. They are saying that included in the sales figure of 1,200 Rand is an amount of 60,000 that was collected from debtors that were outstanding at 31st March 2018. Oh wait, before that, let us go to our calculation pad. So before that, on our calculation pad, we first have to start with the 683,000. We first have to start with the 683,000 accounting net profit before tax. Which is 683,000. So let us go back to the scenario. So yeah, let us start with point one. They're saying that included in the sales figure of 1,200 Rand is an amount of 60,000 Rand that was collected from debtors that were outstanding at the 1st March 2018. Now let us just dissect this. Sales and debtors are two different accounts or transactions. So there are two different concepts. For debtor to be there, a sale should have been recognized. So this amount should not be included in revenue. And as a result, what should we do? We should deduct this amount from revenue because it is not a valid amount. So what do you want to do? You want to deduct 60,000. I'm going to say non-valid amount. Deduct 60,000 because it should not be included in the sales. So let us continue with our test. So now they're telling us that the general accountant only took the purchases of 400,000 Rand into account in the cost of sales calculation. He did not consider the opening or closing stock for the calculation. Per the accounting records, the opening stock at cost on 1st April 2018 amounted to 22,000 Rand, and closing stock at cost was 18,500 Rand. The closing stock consisted entirely of damaged candles, and the market value amounted to 10,000 Rand. PD Candle approached the commissioner, and the commissioner approved this market value. The company also held the following items as per the invoices purchased from the VAT vendors at year end. Now, none of these were held at the end of the prior year of assessment: consumables and packaging materials. So yeah, and let's start with what the general accountant did. So he only took 400,000 Rand of these purchases into account. Okay, purchases are a Section 11A deduction, but he didn't completely take into account the Section 11A deductions in terms of stock, because there is opening stock and closing stock. And I'm gonna go back to the framework again. But specifically now I'm gonna go to step 6, because step 6 incorporates this idea that we're gonna use now of using standards. Yeah, the idea of using standards. So yeah, my step 6 says that know your sections in the Income Tax Act well. Sections such as sections 22 1 closing stock, section 22.2 opening stock, and then there's section 22.8 recoupments. But now we are focusing on closing stocks and opening stock. So what is the implication? That's why you should know the scope. What I'm referring to here is that you should know your scope well for you to implicate well. Yeah. So anyway, let's go to the question. Yeah. So they're saying to us that paid accounting records, the opening stock on 1st April 2018 amounted to 22,000 Rand. You guys know that our year end is 31,000. I mean 31 March 2019. You know that that's very important to note, as I read throughout the scenario. So yeah. So paid accounting records, the opening stock at cost on 1st April 2018 amounted to 22,000 Rand. So what do we do when it comes to opening stock in tax? What is the implication here? Section 22.2 of tax on the framework, 22.2 of tax on the, of tax on the framework opening stock says that you'll deduct your opening stock because you assume that you're gonna sell it. Because in the previous year, you added it back because it was closing stock, because you had taken a Section 11A deduction, a sort of a recoupment. But now you're gonna deduct it again because you assume that you're gonna sell this opening stock throughout the year. So it's gonna be simply Section 22 shift to opening stock. Then it will be a deduction, and they said it is sorry the deduction, and they said that all of these amounts are exclusive of VAT. Be careful of that. Yeah, so you'll deduct 20,000. Yeah, 22,000. Now, what do we do with our closing stock? Yes, that's right. We'll add it back, and since it is exclusive of VAT, we don't need to give mind to that. What is the amount that we have to add back? It will be, we have to add back 18,500 Rand. But wait, here's the extra information. So the closing stock consisted entirely of the milk candles, and the market value amounted to 10,000 Rand. Pre-candle approached the commissioner, and the commissioner approved the market value. This is very important. This means that the closing stock's value decreased, and as a result, we're gonna add back the decreased value at market value. Which is 18,500. Okay, in tax, there is a column in between for calculations. I suggest you write it down. It really helps. It really helps. But these amounts so far, like, didn't need calculations, but there is a column in between for tax calculations. So do your calculations here and write your final amount here for you to have a better answer. Okay. Now let's move on. Now, the company also held the following items as per the invoices purchased from vet vendors at year end. None of these was held at the end of the prior year of assessment. Consumables, 2,200 Rand, and packaging, 5,750 Rand. You see, since you're in PX, I won't lie, they're tricking you guys. So you have to pay attention that they are purchased from vet vendors, and the company held the items as per the invoices, which means that you have to exclude the VAT yourself. Yeah, simply means that this 2,300 Rand and this 5,750, you'll have to exclude the VAT. Okay. So the 2,300 closing stock be 2,300 multiply by what we want over what we have, 115, and that will give us an answer of 2,000. So 2,000 is to be added back in terms of closing stock. In terms of the specifically the not this one, specifically the consumables, because it is closing stock. Then also packaging materials are also part of closing stock. So you'll also have to add this back. As I said, that the general accountant did not consider the closing stock. So yeah, 5,750 closing stock also gonna be 5,750 multiplied by 100 divided by 115. Equals, we are gonna add back 5,000. In terms of section what? 22.1 also this section, same section. So let's move on. Now we are at depreciation. So depreciation of 35,000 Rand has been deducted in the accounting calculation. It's related to the following assets. All amounts include VAT unless otherwise stated. Yeah, all amounts include VAT unless otherwise stated. So you have to be very careful of that, because this is the only way they want to trick you. But at least I put it in the framework. So you have to be very, very careful of that, because it's the only way they can trick you very well. So you can see that, you see, there are like notes of items already included in the accounting net profit before tax here, the notes, and they're like all amounts excluding VAT unless otherwise stated. You see this, don't forget that there will be a case where it is otherwise stated. So always be on high alert when it comes to tax, and I think you'll get your 100%. So yeah, depreciation of 35,000 Rand has been deducted in the accounting calculation. It related to the following assets, and Lana, they say that all amounts include VAT unless otherwise stated. So again, even throughout, you look for the otherwise stated. Always be aware of that. Be very aware of that. So when it comes to the 35,000, what are we gonna do with this 35,000? We're gonna add it back, because there's no depreciation in tax. Yeah, there's no depreciation in tax. So anyway, here's the depreciation. Have to add back this amount, which is 35,000. So 35,000. Gonna add back because it's an accounting amount, not a taxation amount. Now it's time for the taxation amounts. It's time for the taxation amounts. So as you understand with the taxation amounts, let's check the information. Pretty Candle bought furniture on 1st September 2018 to be used in the administration division for 115,000 Rand. This is very important. Then the furniture was, however, placed in storage until 1st November 2018 when it was brought into use. This is also a very important point. Whilst repair work was being done to the administrative area, okay, that's not really that important. So as they said that they bought the furniture to be used in administrative division, that means that when considering your wear and tear, when you're considering your capital allowances, because we are dealing with tax here, you should note that you can only use the section 11E wear and tear allowance, because this is not in a process of manufacture. And note that the amounts are inclusive of VAT. So we'll exclude the VAT, and we will decrease our taxable income by that amount, because it is an allowance. Allowance is a deduction in substance. So why am I always pressing this thing? So yeah, when I go to this calculation pad, then 115,000 rand. So because they said that these things included VAT, it's gonna be 115,000 rand multiply by 100, what we want over what we have, that be equals to, where shift and yeah, so 115,000 cents, yeah. What is this amount gonna be equal to? Gonna be equal to 100,000. So this amount will have to deduct. We'll have to deduct the 100,000. So yeah. And then after, no, we don't deduct 100,000. We come to a calculation. Yeah, we haven't applied the section 11 year capital allowance. Sorry. Come to 100,000, and then you apply the section 11 year allowance, and they'll always give you those years because they're on like an interpreted note. So they'll always give you these section 11 year allowances. So for office furniture, it is deducted over 6 years. Yes, it is deducted over 6 years. So you lose these 6 years to get the capital allowance for the wear and tear of the office furniture. Yeah. So yeah. So 100,000 divided by 6. But you should note that this is wear and tear, and you know that we do apportion wear and tear because it is based on book value. So we do apportion wear and tear based on the number of months. Remember, I said that we are reading through the scenario, and I said that this piece of information is important when it was brought into use. So you apportion it from the date it was brought into use. So yeah, from November to 31 March, it's 5 months. So 5 months out of the 12, that's how you apportion the allowance. So yeah, it's gonna be times 5 divided by 12. So it's gonna be 100,000 divided by 6 equals times 5 divided by 12. Gonna be 6944. The allowance is gonna be 6944. That's your section 11E, sorry. Section 11. Sorry, it's not section 11E, yeah. Yeah, so yeah, that's your amount. It's not really nice right now. Sorry for that. Sorry for that. Yeah, and your amount would be your amount would be 6944. So now let's move on in the scenario. So Pretty Candle now owns a manufacturing machine which it bought new and unused on 1st July 2018 for 655,000 rand, and it was brought into use on the same date. So you now know that brought into use is a very important concept or sentence in text. So you must always be alert when they say that. And also, they say that they own a manufacturing machine which it bought new and unused. So we know that this is a process of manufacture, and as a result, Section 12C will apply. As it is new and unused, it has an accelerated allowance, which is at 40%. But remember, they said that all of these amounts include VAT, so we have to exclude VAT first from the 655,500 rand. So hope I got the right. Yeah, 655,500 rand. So the allowance, we first have to exclude the VAT, take out the VAT. So what we want over what we have, 5. So equals 570,000. Now we know the section 12C allowance, so multiply by 40%. It's gonna be equal to, and you know that section 12C allowances are never apportioned. So it's gonna be equal to 228,000 rand. They are never apportioned because they are rate. It's a secret, they are rate. They are rate based on cost. That's why they're never apportioned. So let's move on to the question. So on April 1st, on 1st April 2018, Kaveshan decided to buy laptops for all administrative staff. Okay, administrative staff. So you know that gonna be a section 11E allowance here. So he bought 4 new laptops for 862,500 rand, 8,625 rand, and all 4 the laptops were possible to use on 1st April 2018. Very important information. On 1st June 2018, the general manager spilled a cup of coffee on his laptop, and as a result, the central processing unit was damaged beyond repair, and the laptop could not be fixed. Pretty insurance company paid out an amount of 9,085 rand in respect of the damaged laptop. So yeah, there's a lot of information to dissect here. So firstly, let's start with the 4 new laptops he bought. Bought 4 new laptops for 8,625 rand each. Let's multiply the 4 and exclude VAT. And no, you know what? Let's start. Let's okay. Again, period is important. So let's first multiply, get an allowance for the 3 laptops and get an allowance for the 1 laptop because the periods are different. So let's just make things easier for ourselves. So 8,625 rand times 3 so it's 8,625 rand times 3 times 100 divided by 115. Sorry for that. Gives us 22,500 rand. 22,500 rand. So we have to check what they say about the Section 11E allowance because they'll always give you those years, as I said, in an interpreted note. So we have to check how many years laptops, how many years laptops are, how many years laptops are depreciated, the rent allowance is taxed on. So here they say computers and other small machines, the allowance is made over 3 years. So obviously we'll have to deduct those computers, those 3 respective laptops, the total amount by 3 for us to get our Section 11E Wednesday allowance. And also note when it was put into use, it was the 1st of April, so there's no apportionment because remember our year end is 31st March, so our year starts is 1st April. So it's gonna be 22,500 rand divided by 3, and that will be our allowance. Sorry. Our allowance is gonna be 7,500 rand. So let's continue with the yeah. So anyway, let's go to the other laptop. Yeah, the other laptop. Now, what happened to the other laptop? It had different year end. What was its year end? It was 1st June. So it means that it was in use for 2 months. Correct me if I'm wrong. It was in use for 2 months. So what we're gonna do is 8,625. Don't forget the tax. Don't forget the tax. Then you're gonna multiply this. No man, what am I saying? Then you're gonna get an amount here, which is 7,500. Then you're gonna divide it by 3, multiply by 2 over 12 because it was in use for 2 months. Gonna be 417. Images for order. Your allowance is going to be 417. Yeah. Now let's move on. So we are done with the allowances for the laptops. So as a result, the central processing unit was damaged beyond repair and the laptop could not be fixed. Pretty Candle's insurance company paid out an amount of 9,085 rand in respect of the damaged laptop. So yeah, this required like a bit of thinking, a lot of thinking, because in this instance, since it was an involuntary disposal, yeah, you will get like a recoupment, but based on the market value. So let us calculate that recoupment. So recoupment equals selling price shift by tax value. So what was our tax value at that point? Our tax value, no, let's start with the, so the market value is deemed to be like the amount received from insurance is like deemed to be like the selling price, yeah, but limited to cost. How much did this thing cost them? 8,625. 8,625. Yeah, 8,625. Then minus our tax value would be shift bracket 8,625 minus what is this amount? Our 417 shift bracket. Yeah, 8,625. Yeah, and that will give us an amount of equals a recoupment of 417. So yes, recoupment of 417. There's no CGT implications, so don't worry about that. Hey, Yeah, don't worry about that. So let's move on. So let's get to point C, no, point D. So what do they say? Only two sentences, but don't be deceived. So he also decided to buy a coffee machine for 2,000 Rand on 10 June 2018. You see, he also decided to buy a coffee machine for 2,000 Rand on 10 June 2018. The coffee machine is used by all staff. Now, this is why I said that you should know your standard very well. I'm sure it's the notes. Okay, I use this. I use the standard. We use the standard here at this institution. You guys use the notes provided to you by the lecturers, but use those notes very well. We'll even confirm with us if you don't think the notes are enough. Just come and confirm with us and we'll give you the complete thing. So anyways, he also decided to buy a coffee machine for 2,000 Rand on 10 June 2018. Remember, Section 11E is limited to like 7,000 Rand. So if you have a small item that is like below 7,000 Rand, that small item will just be deducted in full at once. Yes, there is that limit of 7,000 Rand. So if it is below that amount, that amount will be deducted in full. And remember what I said in the framework. Remember what I said? I was like, furthermore, if the taxpayer is a VAT vendor, but they cannot claim VAT input on a specific amount, that amount will be inclusive of VAT, even though they are a VAT vendor. So what's happening in this scenario? This guy is a VAT vendor, and a coffee machine is regarded as entertainment. Although it is used in trade, it is entertainment for your employees. So it will be included inclusive of VAT. The full 2,000 Rand will be deducted from taxable income. So yeah, section 11E. And please explain these things. Don't just keep it in your head. Please explain these things. They don't just to see numbers and sections, but you must just explain so that they know that you know the principle. So section 11E, you deduct the full 2,000 Rand because our explanation is that it is under 7,000 Rand. Amount under 7,000 Rand. So it is deducted in full. Sorry. That's your capital allowance. So yeah, seems like we are done capital allowances, and that wasn't bad. That wasn't bad at all. So yeah, we can move on. Now, here. This is why I tell you that they might try to trick you in second year because they think you guys are too smart, so they have to make things harder for some reason. Yeah. So we know at the start that they said that the notes of items, these are the notes of items already included in the accounting net profit before tax. But all of the statements before were simple to read, and yeah, they were easy to read. But now they give us a short statement, and they simply say that a speeding fine of 1,200 Rand was paid, and they just like this speeding fine related to 12 February 2019 when the driver of the delivery vehicle exceeded the speed limit on the highway. Can you see that they're trying to trick you here because all of the amounts were included? Why didn't they say that a speeding fine of 1,200 Rand was included as an expense? It means that you should have known as you are doing the calculations that these are notes of items already included in accounting and profit before tax. So what do we have to do? That speeding fine is not allowed to be deducted in terms of tax in terms of section 23O. Can't deduct corrupt activities. So we'll add it back. We'll add it back. Yeah, can't deduct. Can't, yeah, there's another capital O. It's different. So it's small letter O. So yeah, you can't deduct corrupt activities. Then or you can just say invalid deduction, corrupt activities. Shift. You know what I mean? Corrupt activities. add back the 1,200. You know, I'm just abbreviating for like convenience of space. So I just mean corrupt activities here. Yeah, I mean corrupt activities. So yeah. Now let's go back to our test. So here they say that interest of for the 4,600 rand was received on 31st March 2019 from South African Resident Bank. Now remember the basic the MM approach. We said that, you see, elements of the MM approach are actually what they test throughout every test in university. So since you know that you're a company and you receive interest, it's fine, you received it, but you won't get an exemption because that interest exemption is only allowed for natural persons. You're not a natural person, you're a company. You see, that perspective approach now matters. So that interest of 4,600 rand should be added back. No man, nothing will be done with that interest of 4,600 rand because it was already included as interest received. So interest income. So nothing will be done to it. You just have to write there, explain to them interest income was already included. Then you write 0 there. So you'll have to explain every time when you write a 0. It's because the interest income, the interest income is received by a company, and the company is not an exempt person. It's not exempt from interest income because it is not a natural person, and that will be your reason. Yeah. So let us go write that reason. Sorry. Okay. Sorry for that. So I'm gonna have to continue on this side. You know, for AR. So anyway, let us continue. So the invalid deduction, which was a corrupt activity, which was a corrupt activity, we added back the 1,200 rand because it was an invalid deduction. So now let's continue with the scenario. As you can see, using a framework, this thing is very easy. So again, okay, now we are going to, they are saying 0.6, the following amounts were deducted in the accounting net profit before tax calculation. They're like 192,000 deducted in total for Nabila Johnson, tax consultant for 8 months service. So you see the trigger effect in the MM approach comes here again. You know, this approach solves everything. So here it is again. This should trigger you to understand that this will be a prepaid expense. Now you are triggered to scope. Now within the scope of, I think it's section 23H if I'm not mistaken, within the scope of that section 23H. So will you be able to deduct this prepaid expenditure? For you to be able to deduct prepaid expenditure, there are two requirements. It's either it must be less than 100,000 rand and it must be less than 6 months. Now let us calculate the amount that should have been deducted this year from tax rightfully, and the amount that is prepaid expenditure. So we want to take this 120,000 rand, right? And apportion it according to a number of months and see how much of it should have been deducted. So it should have been deducted for 1 month. Yeah? Then we'll check if this prepaid expenditure is valid and we can have a prepaid expenditure deduction. I hope you heard that. So start here with the 120,000 rand. So we'll have to apportion it first. 120,000. Yes. The number of months, what was our number of months? From 1st March to 31 October 2019. So okay, it's the end of February to the end of October. That's 8 months. So 10 minus 2 is 8 months. So let's go and apportion it for 1 month out of 8 months. I repeat, 1 month out of 8 months. So 120,000 rand times 1/8. What will that amount give us? This calculation is like what I told you before. It will be the middle column that you must always write down. Always write down your calculations. Never just think them. So yeah, this is our calculation. 120,000 times 1/8, which will be 15,000. So 15,000 should have been rightfully deducted. So 15,000 being deducted is all right. But what about the rest of the 115,000? Huh? The 115. What about that now? What about the 115? We have to determine if it's a prepaid expenditure. Now, remember our first rule. Our first rule that it must be what? It must be below 100,000 rand. And what? Shift. And it must be less than 6 months. Now, can you see the first requirement is failed? It is greater than 100,000 rand. And also the second requirement is failed as it is greater than 6 months. So there will be no prepaid expenditure deduction. But you writing these 2 points would actually give you marks in the test. So as I'm saying, don't just think, write whatever you're thinking, then you'll see after, scratch after, as my colleague usually says. So after we've determined that the prepaid expenditure is not deductible, I'm sorry. So in brackets, prepaid expenditure not deductible. Now, what should we do with the 120,000, which is in the scenario? We should add back 105,000 because only 115,000 was a valid deduction. So yeah, these are our calculations. Now we're gonna add back 105,000. Here we're gonna say not deductible. Not deduct, and then yeah, not deductible. Yeah, not deductible. So let me just put these are our calculations. Remember, they're not part of that. They're not included. These are calculations. So anyway, let's move on in our scenario. So membership fees, okay. Yeah, here you see that approach still stands supreme. Even here, you had to know your scope. It is an element of the approach. So this amount specifically, they are like membership fees as forum for alternative energy by law. That's important to note. Pretty Candle has to be a member of this forum. Now, let's look at this. First, remember that process. We first see if it was an allowable deduction within the year. Okay, let's go into the calculation. So an apportion for the number of months. So from 1st January to 1st January 2019 to 31st January 2019, yeah, it's gonna be 12 months. So you're gonna portion this 24,000 rand for 12 months, but our year end is 31st March 2019, remember? So it's gonna be 3/12 times 24,000. This is part of our calculation, remember? It's gonna be 3/12 times, what is that, 24,000, right? 3/12 times 24,000. And yeah, 3/12 times 24,000, 12 times 24,000. It's gonna give you 6,000. So 6,000 was rightfully deducted. But again, don't forget your prepaid expenditure. That's why I'm like, you should know your standard well, but those are just two requirements. So also use use the trigger in the sense that if you've paid for amounts that that are due next year, or where you're gonna get the benefit next year, if you pay for those amounts in which you get the respective benefit next year, there's a possibility there's gonna be a prepaid expenditure. So always think about that if that's the case. It just wants you to stimulate your thinking here. So anyway, yes, it seems like a prepaid expenditure. Now let's match it to our requirements. You don't have to write the requirements down again because above you wrote them. So you'll apply them based on those requirements. Is 18,000 greater than 100,000? No, it's not. Is this how for how many months is this thing outstanding? No, I'm sorry. As I said, that this is a high level. This is one of those high level standard question where you have to know your scope. So there's a specific proviso in our standard. I'm sure you have notes, but this is like besides, it's a proviso alongside the prepaid expenditure proviso. That's why I'm so confused. But anyway, it's a proviso along the prepaid expenditure proviso anyway. But now I've rectified it. I'm not confused anymore. So the proviso is that if you make a payment by law to an organization and you're required by law, you can deduct that amount in full. Even if it's prepaid expenditure, you can deduct that full amount on the date. So you're not classifying it based on prepaid expenditure. You just deduct the full amount because it is required by law for you to pay that amount. So SARS allows you to deduct the full amount immediately. So we'll deduct the full 24,000. Ignore the apportionment. Sorry about that. The apportionment related to the first point, Napila Johnson, tax consultant for 8 months service. So this is the second point. You deduct it in full 24,000 because there's a provision in the standard that says that you can deduct it in full if it's required by law, if that payment is required by law. So yes. So let's go to our calculation, then deduct the full 24,000. I don't know in your notes what they call it. Yeah, but because he already deducted in accounting net profit before tax, you don't deduct it. So I see the issue was whether like was it right for him to deduct it or not. But so he was right to deduct the full amount. So yeah, it's okay. But you can just write that that the full deduction was allowable for you to get the mark. You see, like write what's in your head. Don't just keep it there. Those are marks. Yeah, the full deduction was allowable. Then see about the calculations, you can say yeah, 4,000 there on the side, and then in your taxable income will be like 0. You see, it's an explanation for the 0. So yeah, the deduction was allowable in terms of it's section 23H now, provisions to that section. That's why like even prepaid expenditure, like it's prepaid expenditure is proviso AA and PP. The first two provisos are 100,000 and less than 6 months. Then proviso CC, that's the full deduction allowable if you're required by law. But I wonder what they said in your notes. As I said before, we use standards, you guys use notes. But it should be there in your notes. If it's not there, come to us, we'll give you everything. So let's continue with the question. Again, be careful of how they can shoot you. They're like, on 25 March 2019, dividends of 85,000 Rand was declared and payment made to Kavashan Subramanian, the sole shareholder and managing director of PT Candle. You see, this is also like a funny sentence because they wanted you to remember that these are notes of items included in accounting net profit before tax. So this is the like highest extent of what I can say application, yeah, because you had to really think deep and see that, oh, this means that this guy, because he's a general accountant, he wasn't sure if the amount was correct according to the scenario. So he included the dividends, he deducted them from accounting net profit, or he deducted them from the accounting profit to get the net profit. So that was wrong. So you should add them back, as they said that he wasn't sure if the amount was correct. So you should add back the amount which is 85,000. A4, yeah. So we should add back 85,000. So yeah, dividends are not deductible. That's your reason. You see, other points are logic. Other points are logic, but I believe in you guys made it this far, so you guys actually do have logic. I'm sure you remember that you used to call you guys the cream of the crop first year. Yeah, there's some truth to that. So dividends are not deductible, so you should add back the 85,000. Remember, they said all amounts inclusive VAT unless otherwise stated. They didn't state that is inclusive of VAT. So all the amounts, this amount is exclusive of VAT. You see, always remember that VAT thing. Now, this is like the final step. Funny enough, is not. I already told you about step 6, but I didn't tell you about step 5. So this is really the final step, although it's not in sequential order. The final step of this framework is focus on amounts that are not taken into consideration. So let's go to the framework. Oh, yeah. So here's my step 5. Then focus on the transactions that are not taken into account. Yes. Now that means you adjusted to your taxable income, obviously, because he didn't even take them into account. Yeah, I didn't even take them into account. Let me do this. Yeah. So let's go and finish off this question. So notes of items not yet included in the accounting net profit before tax. All amounts include VAT where applicable. You heard that, right? Yeah. So note 8. Pretty Candle entered into a 30-year lease agreement for the rental of factory premises from 1st April 2017 at the rental of 13,800 per month and immediately occupied the property. Again, the approach reigns supreme. Here you should know your scope. Within your scope, you know that this qualifies for a section 11A deduction, and they said all amounts inclusive of VAT, and this is a VAT vendor, so you should exclude the VAT. So let's go to our calculations and exclude the VAT and recognize a section 11A deduction. So I'm gonna start with our, remember it was put in 2017, yeah? Remember, it was put in 2017, yeah. So the deduction will be for the whole year, but exclude it of VAT. You can do it, yeah, I'm gonna do this way, but you can do it other way, do it starts or do it at the end. I'm just gonna exclude the VAT at the end, same thing. So times 12, then simply gonna say times 100 divided what we want over what we have, 15. And that's gonna be 13,500 times 12 times 100 divided by 115. Yeah, so our answer is gonna be 140,870. So this will be your section 11A allowance. What's going on? Yeah, so it will be your allowance. So yeah. Yeah, so let's see your section 11A allowance. Now let's continue the scenario. No, man. Yeah, it's 30,800. That's why I'm sorry I paused. I used 30,500. That's why I paused for a moment. I knew, man, that something was wrong. Sorry for that. It is 144,000. Yeah. So that's your Section 11A allowance. Now let's move on in this scenario. Okay. In order to secure the lease, a premium of 100,000 rand was paid on 1st April 2017. At this level, like I'm sure you guys already know that there's a section in the standard that allows for the premium to be deducted as an allowance for the lessee. If you're the lessee, you pay the premium. There's a section that allows you to deduct that premium. I think, if I'm not mistaken, might be section 11H or something, but it's somewhere there. So you should deduct your premium based on allowance, which is based on the term of your contract. But what you guys know already that it's limited to 25. So since it's limited to 25, then let's go to our calculation. That's all you have to know. You see, knowing your scope, which is in the approach, is really fundamental. So 100,000 rand, excluding VAT. You see, they told you. Remember, you see VAT. Like the only other way they can catch you is VAT, and you will seem like you don't know nothing, but you actually forgot to take note of VAT. Always take note of VAT. So anyway, yeah. So the premium was 100,000, excluding VAT. Yeah. Divided by what? Divided by the N was 30, eh? But limited to what? 25. Equals. Let me do it on my. Almost thought this was a calculator. Sorry. But anyway, 100,000 divided by 25 equals 4,000. So recognize an allowance for the premium. I told you an allowance is a deduction in substance. So you recognize allowance for the premium of 4,000 rand for the lessee, which is us. Remember, perspective, who we are, counts here also. That approach is really helpful. So the factory had to be adapted to suit the company's needs. And in terms of the lease agreement, Pretty was obliged to improve the factory building at the cost of 900,000 rand, excluding VAT. The building improvements were completed on 30 September 2018 at a cost of 1,150,000 rand, excluding VAT also, and were immediately put into use. You know that's important by now. You already know. I don't have to say that again. So they were put into use in the process of what? Of manufacture. So a building put into use the process of manufacture. Remember your scope. Get triggered to use your scope. Remember that. Remember that sequence. Remember that sequence. Remember that sequence. Remember that sequence. Remember that sequence of trigger, scope, implication. So it's a building used in the process of manufacture. Section 13 should be triggered automatically. So then you go to your scope and then implication. Without knowing that trigger or being aware of the trigger, you wouldn't have known that section 13 applies to this. So please make use of the approach at most times. It'll really give you the 100% you want. So they're telling us here, né? Let's digest this. So they're telling us here that we have to improve the factory building at a cost of 900,000 rand, excluding VAT. At least excluding VAT. But now, this improvement, I think there's a section 11G allowance for, there is in fact a section 11G allowance for lessees if they effect an improvement on the contract. But remember, the improvement must be limited to what? To the amount stipulated in the contract. Here they give you an excess, né? And here I won't lie, this is like an honors like principle. What you do with the excess is that you still charge section 13 allowance. Yeah, that's what you do with the excess. You charge section 13 allowance. So you still charge that 5% on the excess. But now let's look at the improvement. Remember that lease improvement and premiums are apportioned. So when was this brought into use? It was immediately brought into use in the process of manufacture when? On 30 September 2018. On 30 September 2018. So when it was brought into use on 30 September 2018, our year end is 31 March 2019. So for how long was it in use? It would be from September to 31st December, that's 3 months. From 31st December to March, that's 3 months. So that would be 6 months. 6 out of 12 months, the improvement was used. So let us go there and get the allowance for the improvement for the lessee, because it's a benefit for the lessee. So yeah. Wait, let's start with 900,000 rand. It's gonna be 900,000. Limited to the number of years of the contract, which was 30 years, remember? But it's limited to what? To 25. So 900,000. Wait. It's excluding VAT, yeah? Yeah, I'm always paranoid about VAT. But 900,000, the 900,000 divided by 25, yeah. But it was in use for 6 out of 12 months. So that will be your premium. I mean, lease improvement. Sorry about that. I know this for sure. Section 11G. This one, I think it's H. Sorry about that. Yeah, the premium is H. Yeah, the premium is section 11H. So yeah, let's continue. So as I said, that this is an honors type of principle. That the excess of the improvement, you will charge section 13 building allowance. Yeah, so it will be at 5% because it was constructed by you. Remember, even though it's an improvement, you're still constructing this building. It's part of the building constructed by you. So you multiply that by 5%. The allowance will be 5%. So what is the excess? 900,000 minus 1,150,000. Hey, I'm sorry, I don't want to put that in the calculator. It's 250,000 times 5%. And you get 12,500. That'll be your allowance. $12,500. Yeah. Be allowance of 12,500, right? So now let's move on in the scenario. So we're done with point A. Now point B, during the year, South African debtors for kind of sold on credit amounting to 28,750 rand were written off as bad debts. Don't confuse this for an expected credit loss as a doubtful debt. This is a bad debt. So there's nothing fishy here. So all you have to do is exclude VAT. Remember, I'm always paranoid about VAT, but here they didn't say anything about excluding VAT. And remember at the top, they were like, they stated that all amounts include VAT were applicable. And nothing was stated otherwise. So you'll simply deduct your bad debts because they are allowed as deduction, in terms of tax, section 11A, and carrying the cost of trade. So yeah, you have to deduct your bad debts. Bad debts, like 28,750 times 100 divided by 115, what we want over what we have. So 28,750 times 100 divided by 115 equals 25,000. Shift. So these are bad debts carried in the course of trade. Bad debts incurred in the course of trade. Yeah. So let's move on. Let's simply move on. So yeah, as we are moving on now, let's go to the scenario. So since we are done the bed debts, this is the last point of the scenario, which has 3 points within it. So they like the general accountant was not sure how the following transactions relating to trading stock should be dealt with. All amounts are excluding VAT. Goods are sold at 50% markup above cost. So that 50% markup above cost is important to note. And as I said, you should know your scope. Remember, know your the notes they give you, which is a standard for me, but know your scope really well, because this means that section 22 is going to apply because it deals with trading stock and it. So somewhere in section 22 going to apply something. So let's go on to see which part of section 22 we are going to apply. So on 15 December 2018, Pretty Candle donated candles with the market value and selling price of 6,000 Rand to a home for street children. It is a registered public benefit organization. Pretty Candle received a Section 18A certificate for its donation. Okay, we know that you'll get your donation. Okay, that's easy. That we'll see later. But the main thing we have to see now is, you know that when trading stock is donated or given to the owner for private use, or the owner takes trading stock for private use, there's a recoupment that has to take place, because you're recouping the Section 11A deduction. They should deduct it because you are like, we incurred these things in the course of trade. Yes, this was incurred in the course of trade. So according to the standard, which I know there's A and B, né? So according to the donations are recouped at market value, né? But according to the standard again, since it is Section 18A certificate for this donation, it will be recouped at cost. And they gave you the markup on cost. They gave you the markup on cost. So what you have to do here is use the markup to get your cost amount, because the market value is equal to the selling price of 6,000 Rand. So let us go and do that. Yeah, so let us go and do that. So you're gonna recoup at cost because it's Section 18A donation. If it wasn't, it will be recouped at market value. So just write Section 22, Shift 8. Remember, I said in the I hinted in the framework that know your sections in the Income Tax Act well. And if you can see, most of the sections I listed here, these are the sections like that I was busy doing here. Like, okay, when it comes to trading stock, it's like something that people don't think of. So I'm saying, like, know everything well. Even trading stock, the sections, group them. Section 22.1 is closing stock, 22.2 is opening stock, Section 22.8 is recoupments. You know, that's what you should know, because that's how you're gonna label them in your solution. So yeah, Section 22A, it's an recoupment at cost, so it's gonna be calculating now. Now calculate is gonna be 6,000 times what we want again over what we have. The simplest explanation solve complex things, the most complex of things. So here it is, 6,000 times 100 over 150. So 4,000 Rand. Recoupment, remember, it's a positive. 4,000 Rand will be recouped. 4,000 Rand will be recouped. Yeah, so 4,000 Rand will be recouped. Now, let us continue. So yeah, let us continue with the question. So now we're going to B. On the same day, Keveshan decided to take candles with the market value and selling price of 7,500 Rand to give as Christmas gifts to his family and friends. Now, I told you again, you should know your scope. Within the standard, it also says that a taxpayer, like, who owns the business 100%, he has 100% like shareholdership of the business. Remember, can show again in the scenario, he has 100%. Remember, be very skeptical. Where's this cover shot? Yeah, he's the sole shareholder. So which means that he has 100% of the company. So that means he is actually the taxpayer taking the trading stock for private use. So it is not a dividend in specie. Don't confuse those things. This is not a dividend in specie. This is simply the taxpayer taking it for use. If it was a dividend in specie, it would be a recouped at market value. But because it is taken by the taxpayer, which is the majority shareholder, 100% ownership, which is the taxpayer. I know this is a bit of a high level concept also, but not that high. But because he took the trading stock for his private use, domestic use, that's the important thing. He will recoup this trading stock at cost. So let's recoup it at cost because they gave us the market value selling price of 7,500 Rand. Let's recoup at cost. So remember section 22 what? Section 22.8. Very important. Very important to label your amounts according to sections. So yeah, section 22.8. We're gonna say that we are recouping what it costs. What does it amount? 7,500 Rand. So 7,500 times recouping the cost, what we have over what we want. No, what we want over what we have. Sorry about that. What we want over what we have, which is 100 over 150, and it will give us 5,000 Rand. So we wanna recoup 5,000 Rand. So since we have recouped the 5,000 Rand, let's continue the scenario. We are done with that. Yes. So at our last point, finally, they're like during June 2018, candles with the cost price of 1,000 Rand were used in the offices during load shedding. Now here you still have to know your scope, and this is a very deep concept that not deep concept, but it's a deep requirement in the scope, which is in the standard, so in your notes. So within the requirement, they're like assets that are not used as trading stock anymore will be recouped in market value. They're not donated, they're not taken by the owner, they're just not used as trading stock anymore. Here they're used in the office during load shedding, so they're not used as trading stock anymore. So you'll recoup this cost price at market value. Okay, this was a high level. This was a high level concept because you'd have to do the reverse of what you did to those market values. You have to increase this 1,000 Rand to the market value. And in order to do that, you simply multiply the 1,000 by 150%. That's what we want because markup is 50% above cost. So that's what we're gonna do. So it is also a recoupment. $1,000 times 100 and what is this? 100 and what is that, man? 150%. 150%. So it's 1,000 times 150 shift percent equals 1,500 Rand. So this 1,500 Rand this 1,500 Rand will be recouped at what? Market value. Yeah, I could have written here at market value there. Cook that cost. Cook that cost, cook that market value, and also here was it what? Yeah, also our 6,000, remember, was recouped at cost, at cost, remember, because it's a donation to a public benefit organization. Yes. Bear with me, it's just like let me just write it here. Yeah, at cost. Recouped at cost. So yeah, that seems like we are done, but wait, remember that deduction. I'm doing this in order. I'm trying to give you a framework. A taxable income framework was given to you guys. So I'll have to do this in order. If you can see, I just calculated the taxable income after considering allowances and deduction, deductions from gross income. Now we'll have to consider those the section 11A, section 18A specific deduction that's at the end. Structure is important here, you see, it's important here. So we'll simply be saying less section 18A deduction. Oh yeah, the reason why this format is even important is because let me erase this. It's because we have to come up with the total at the end. So let us calculate our total before we deduct our section 18A deduction. So it's 683,000 minus. If it was Excel, I would have just used the function. Okay, plus 18,500 plus 2,000 plus 5,000 plus 12 minus 6 minus 228 123 minus 7,500 minus 417 plus 417. Yeah, have a look at the framework while I calculate. Let me see. Have a look of it. So plus 417 minus 417 minus 2,000. Yeah, plus 1,200 plus 5,000. Yeah, plus. Wait, I forgot. When this, there's a reason why they said it's used in trade. Sorry about that. There's a reason they said that the cost price. Remember that cost price we calculated and converted to market value. This cost price of 1,000 rand like was used in trade, so it also qualifies for a section 11A deduction. Yeah, for a section 11A deduction. So it will be section 11A. Yeah, section 11A deduction. It's simple. You just deduct 1,500 using the cost of trade. So here you want our total. These are section income before before section 18A. So I was busy with the calculation. Plus 1,500 minus 1,500. Yeah. So we get 423,256. The reason I calculated this is because your section 18A deduction is limited to your taxable income before it. Yeah, so section 11A, section 18A, I mean. A. Yeah, so what will this amount be? Sorry, I'm just double checking something. Double checking the total. Sorry, I'm still double checking. Yeah, so yeah, that's total. Then let's calculate our deduction limited to 10% of the total. So what is that? That's 42,326,000. So yeah, you can deduct and it's deducted at recouped amount. Yeah, you can even state here, right? Which was 4,000. So yes, just write it here. Less 4,000. So less 4,000. So let's doing the same thing. Yeah, and it will give you your final taxable income, and that's your 40 marks. So it'll be 423,256 minus 4,000. Taxable income will be 419,256. Will be 419,256. Yeah, that is our taxable income. 419,256. Yeah, that is our taxable income. Yeah. Now I'd like to do something. If only I had the solution. Okay. Like to do something to show you something. So yeah, this is the solution. And I want to show you how close, yeah, most of our answers, how most of our answers are right, to show you how you would have gotten 100%. I didn't look at the solution not even once, as you can see. You are busy with me doing these calculations. So let us check if we were fully right, that our taxable income is correct. Okay, where's this thing? Okay. So number one, wait, Eva, this thing. Ish. Okay. Okay, so number one, taxable income given 683,000, you're right. Non-valid amount deducted 60,000, you're right. Opening stock deduction 22,000, you're right. Then closing stock, when we what's each, I did say that we should use the 10,000. I don't know why I use this 18,500, but I did say, I remember me saying, you'll correct me, I remember me saying that I will where's this, the 10,000. I remember saying that this 10,000, you recoup that cost at just 10,000. But it means my mind wasn't in line with my hands, because this should be 10,000. Wait, let me just do this. Hey, you come, where did I move on? Oh, yeah, and like this is 10,000. Yeah, this is 10,000. So Yeah, 10,000, not 18,000. And I did say it's just a mistake. Sorry, mistake. Just a mistake. So anyway, let's continue with the solution. So 10,000, yeah, 2,000 we included, 5,000 we included, 85,000 depreciation we included. Let's check out when tax. Remember, we used the framework only. We didn't look at the solution even once. So, and you can count. Okay, there are marks on the sides. Just each mark is roughly one. You see, or two. So I think I will provide the solution on the group, and you'll check it yourself. But yeah, we'll check the marks that were accumulated. So as you can see, 694 was right, 228,000 was 228,000 was right, 7,500 was right, and you understand completely why. 417 was right, 417 again was right. Understand completely why. 2,000 decrease in 2,000 was right, and invalid deduction because of corrupt activities that we added was right. 1.2 thousand. Then technology. Then yeah, let's just take this don't need that part for now. So yeah, so you see most of them are 1 mark. So yeah, so yeah, even the, let's check. So since we are down to coefficient and the invalid deduction, the SA interest, remember, 0. That SA interest, there was no exemption, and I said value don't include anything. Where did I write it? Yeah, this is one of the cases where, but yeah, it was 0. Then you don't include the amount. Just I didn't write it. Just it was because as I explained, the exemption applied to a natural person and not the company, so it was 0. So there was no mark if the exemption was used. It can't be applied to a company. So prepaid expenditure per accounting records. Let's look at the prepaid expenditure per accounting records. You see, there was a sense of prepaid expenditure. They did it another way, but I suggest you use my way because my way is the most simplest. They just used the full amount and deducted that full amount to see what would be added back. I just added back what should have been added back. You see, like the 105,000, they should have been, as they say, alternative, not deductible 105,000, but the rest is the rest is the same. Oh yeah, this 0 was for the interest. Remember this 0. That's why it's randomly here. This 0 was for the interest. Yeah, but the full deduction allowable, I wanted to, the 24,000 full deduction was allowable. Then there's, okay, the full deduction was allowable. So then as we move on, okay, the 85,000 was after. So I deducted the full 24,000. Then the copier rental for 8 months. That's legislation. Copier rental for 8 months, 16,000. Where is this copier rental? Seems like unfortunately I forgot the 48,000, but I'm sorry, I'm tired. But the thing is that the 48,000 was the same principle as point 1. First, you check if it should have been deducted within that year, you would have gotten the same answer. And after you check if it was a prepaid expense. So this qualified as a prepaid expenditure. The rest of the 12,000, as you can see here, the rest of the, 32,000 qualified as a deduction for the current year of months. Yes, section 11.8 deduction. But then this is the point of the of the deduction, the balance of deductions. This is the point where where those two conditions in terms of prepaid expenditure were met. So here they weren't met, here they were met. This was a different proviso CC, but here the prepaid expenditure deduction requirements were met. So it was less than 100,000 rand, the 16,000, because 32,000 was allowable, right? So 16,000, the 16,000 wasn't allowable unless it was a prepaid expenditure. So yeah, it was less than less than 6 months, and it was less than 100,000, so it was allowable. Yeah. Yeah, here they just separated the requirements. You see here, greater than 7 months and greater than 100,000. Yeah. So now let's move on. Let's move on to the rental expense. It's correct, 144,000. Lease premiums correct, 4,000. Then where's that 8,000? Oh, so the leasehold improvement I didn't write here. It's supposed to be 18,000, 900,000 divided by 25. Divided by 25 times 6 divided by 12 is 18,000. Sorry for that, guys. Sorry for that. It's 18,000. It's an allowance. The reason I can't change the others is because of the formats. I'm sorry. So yeah, it's 18,000. So we are correct here. So it's 18,000 correct, 12,500 correct, 25,000 rand also correct, 4,000 correct, 4,000 correct, because it was at cost. Remember, recouped at cost. And the goods taken by the taxpayer for private use, the 100% shareholder, 5,000 correct. Goods taken for trade use, recouped in market value, 1.5. Remember, correct. Then there was a section 11A deduction. 1,500. And as you can see, I think that was most of them. It's like 36 using the framework without looking at solution. That was 36 marks because like the balance rate doesn't matter. Okay, let's continue. Not even 36. I must start, I think, on 2 points or something. So it's around about 38. Then maybe because of the balance, we'll see if they give you a mark for the balance. Yeah, I don't see a mark for this balance. I don't see a mark for balances. Yeah, so in terms of the limit, yeah, but because of the limit, maybe we got the limit wrong, but there's like 1 mark. So, and the donation again, 4,000 was deducted, section 18A deduction. So yeah, you got 36 marks out of 40, because 4 points were wrong. 4 points were wrong. So imagine by just using the framework, you got 36 out of 40. So that's 90% just by using the framework. So imagine if you perfect using it all the time, because I just developed this framework recently. So imagine if you perfect using it all the time, you are guaranteed at 100%, or just 10% shy. I'm sure you can do better than me. So that is the end of the PX session. Thank you for everyone that attended, and I'll be accepting any questions now. Five, four. Questions period is ending in 5, 4, 3, 2, 1. Thank you guys for attending this session. Oh yeah. For those who attended, if you want the recording of the video, just send an email to me. Send me a WhatsApp of your email and your name. Then yeah, you'll be able to view the recording. Thank you very much. Oh.